Wall Street has been raining money weeks after weeks. We've been hitting Dow and NASDAQ, S&P highs. It is raining real rain here. This is just regular old rain here on Monday morning. Just regular rain. Halliburton is an international company. They cover oil and gas and manufacturing. They do everything from production to discovery to the maintenance to you name it. Halliburton's there and they're doing it. They're huge. They have over 100 branches and divisions. They run it all. They're in every country you could imagine. They're even in a few countries that haven't been colonized yet. I'm pretty sure the back of the flag Neil Armstrong planted on the moon said Halliburton. They were like, look, bro, if we can find a free car wash token here in the middle of the moon, we're going to come up here and find a way to make that profitable. Halliburton does a little bit of everything. Today they released their quarterly earnings. EPS came in at 23 cents, beating by 5. Revenues came in at $4.96 billion. They only beat by $100 million. But I think there's a reason for that. So let's take a look into the numbers. Again, huge company. If you're thinking anything about investing in Halliburton, I really hope you enjoy reading because there's going to be a lot of reading involved. But let's take a look at the quarterly earnings and some of the numbers I think that are the most glaring. And that's that their revenues are up year over year, 30%. Revenues are up quarter over quarter, 24%. Revs up 30% year over year, 24% quarter over quarter, 24% revenue growth domestically, 7% only internationally. So I think that says two things about the revs, even though revs were only 4.96 billion. I cash that out of the bank later today. Only 4.96 billion, only beating by 100 is what I was really getting to. Is that, first, the Baker Hughes rig counts we've been looking at, that's Halliburton on the forefront of a lot of this, right? Halliburton is already so ingrained in these markets that when these numbers go up, they increase revenues. They're everywhere already. They've already broadened their spectrum so much that the minute industry picks up, they naturally pick up with the industry because people trust Halliburton, have contracts with Halliburton, they use Halliburton for a lot of stuff, and Halliburton's though they're doing a lot of their own things. So Halliburton gets the benefit. So we've seen, it was at one point 25 of 26 weeks of oil rigs up, right? So Halliburton's going to benefit. So there we see domestically the 24% revenue increase. And secondly, I think that Halliburton and analysts on Wall Street both probably seen this coming. They both knew that things were getting better in a lot of the industries that Halliburton really focusing on, and that revenues were naturally going to increase. So they already had this accounted for. That doesn't mean that this is not a beat of a much bigger proportion if you break it down, right? Because we take a look at those percentages, they beat by 30% year over year, 24% quarter over quarter, and then 24% domestic revenue growth. That goes to tell me that they accounted for this. So did the analysts. Halliburton and analysts at banks had accounted for this. So the beat doesn't look as astronomical, but those percentages are fantastic. Don't just go out and invest in Halliburton because some of those percentages are great, or they beat this morning, or there was only a couple other companies that reported earnings this morning, or you really think that there's more than just the one free gas token at the middle of the moon, and that if Halliburton digs down there, we're gonna all be getting free car wash or whatever it is. Don't do it. Don't do it. Just do your research, read. There's a lot of information about Halliburton. It goes much further down the rabbit hole. But 30% year over year, 24% quarter over quarter, 24% domestic growth in revenue. That's fantastic. Halliburton doing their thing, like usual. Halliburton's doing their thing.